Alright, y'all, so we are back with another video and pretty much going to be breaking down my trade on how I made. Let's go to our trade copy right here across four accounts, 1540 times 46160 plus my other funded account. So 6260 on the day. Okay, so did this all with copy trading on my funded futures. I have five funded accounts. One has too much drawdown, and I'm actually going to get into how to trade my funded futures accounts also. Okay, so one has just a big balance, and I didn't want to take the risk on this trade in case I lost on my. It was my first account that actually bought me these accounts that I have. Okay, so we're going to get into the trade breakdown. Then I'm also going to drop some knowledge on my funded futures for you guys too. I'm gonna pull that up. All right, so let's get into it. So pretty much for today's trade breakdown, New York Monday, I took a buy. It was a little over 1 and 2. Used two contracts, made 1540 across four accounts, and then $100 on my other account just to secure the payout. And also, tomorrow is payout day, so I'll make another video on that on requesting a payout and the process. And it's literally instant, like instantly to my bank account. It's actually crazy, but we're gonna get into this. So coming into the market, we had swept all-time highs. Okay, swept all-time highs. That's all-time highs right there. And as I talk about in my videos, I trade liquidity, but it's all based off of wicks. And depending on how you look at it, like right here, this was pretty much what my entry was off of this wick right here. And you'll just call it a fair value gap, but I look at it way more deeper than that. And then in my mentorship that I'm going to create, I'll get into like how liquidity actually looks. I'm actually going to tell you guys about my entry or how I got tagged in. It was actually based off liquidity, not just a fair value gap. Okay, so pretty much today, like I said, swept all-time highs. Clearly bullish on the day, but I also seen sales because we also had swept coming into market. We had swept the 30-minute high and 15-minute high, and then we gave multiple entries to sell it down. But I wanted to see buys. I knew we'll get a buy setup. So I waited for what I wanted to see. Waited for my sweep right here, which was my drawn liquidity that I had. Took my entry off of, okay, it says right there. It wasn't on this fair value gap. It was somewhere more down. Something, and it was a little over a 1 to 2. But yeah, so pretty much it's literally so simple. Drawn liquidity, which was this. Drawn liquidity. And then let me also tell you guys about my target. Okay. Like I said, the market moves from wicks. Wicks is liquidity. Okay, let me take this off. Wicks is liquidity, right? So my target was this right here. Okay, and that's not a fair value gap. It's not. It's literally a wick that caught my eye that I knew that we could potentially reverse from, and it's this wick right here. And if you notice, that's exactly where I got out at. And if you also notice, that is exactly where the market turned around at. Okay, so and that's what I tell you guys by. The market is just deeper than fair value gaps and volume imbalances and inversion fair value gaps and order blocks. Like it's really just all in the wicks. And in my mentorship, I'll talk about that. But it's literally how simple trading is. It's just drawing liquidity or the way I trade, drawing liquidity. As soon as that gets hit, drop down to the 1 minute. Then after that, wait for we're gonna call it fair value gap or volume imbalance, and then enter. I don't enter off of inversion fair value gaps, order blocks, breaker blocks. I don't enter off of none of that. It's fair value gap and a volume imbalance. But the only thing that separates me is that I identify liquidity very different than other traders. Okay, and I'm gonna have a mentorship talking about that on like how you can tell what wick the market will reverse from. Okay, but now I'm going to get into the my funded futures accounts and why I only took this trade on four accounts and not five. Okay, so And tomorrow's payout day, so we're gonna talk about that also. So, how do I buy an account? Let's just say I wanted to buy. Okay, right here. So, boom. So I have five of these. Okay, so hold on. So I have five core accounts, right? They all cost 77 a month with no activation fee. Okay. Then I'm moving to Top Step. As you can see, I have the Top Step tab open, but we're moving over to, hold on, y'all. We are moving over to My Funded Futures. Okay. I mean, we're moving over to Top Step. Sorry. Okay, but the thing with these accounts is you don't want to, with the core account specifically, you don't want to build a crazy buffer because you only can take out a 1K payout max. And when you take out the 1K, they keep 20%. So essentially, you're only taking a $800 payout. But across five accounts, that's a 4K payout, which I'm going to take out tomorrow and which I'll be making a video on for you guys. Let me market buy this real fast. All right, so yeah, like I said, which is what I'm going to be doing tomorrow for you guys. So, and I'm going to make that a video of the whole process. But so with these, you don't want to build a crazy buffer because they only let you take out $1,000, right? And they only let you do that five times. So across five accounts before they move you to live. And if you want to go to live, then you can do that. But the way to trade is just to get as much money as possible from these pop firms, right? So with Top Step, you could have a crazy balance. You could build your buffer up to 10K, 15, 20K because they let you take payouts up to 5K. But with this, you only can take a 1K payout. So there's no reason why you should be building your buffer up to 10K and you only take out 5,000 and then the other 5,000 just disappears. So with these accounts, I literally get it up to low buffer like I'll literally take my first payout at like 1,500, 2,000. But you might think, okay, 1,500 too low. You're taking out 1,000, you're gonna be left with 500. But the thing is that if I follow all my rules and trade my strategy and my trading plan as I'm supposed to, I fully believe that I'm confident that I can bring that 500 back up to 1,000, back up to, take another payout, 2,000 and then 3,000 and then just chill out, take my $100 days and get my payouts. But if your strategy does not allow you to, you know, get out a drawdown, then you should not trade like that. You should build a bigger buffer. But I'm fully confident that I can take an account from 500 to 3,000. If I follow my rules, risk properly, I'm fully confident that I can do that. And then my first account, I literally did that twice or three times, I think. That's how I do it. But yeah, that's pretty much it for today. It's literally so simple. Draw on liquidity. I get my PD array. I enter from it. I don't think about it. I don't overthink. I set the limit. Okay, and I'm gonna give you guys some more sauce. So, okay, let's say my entry's right here, and then my target is here. Okay, so if I have a limit set and then this limit does not get hit, but my target gets hit, this limit is invalidated. As you can see, let's say, okay, the target got hit, but I ended up pretty much just leaving my limit. You see how price ended up running through this? That is not what you want to see. So the way I do it is if that target gets hit, I close it because the way price moves is that if a certain point gets hit, then the original entry can be disrespected, and I need to come up with terminology for this because I'm really not good at explaining it, but it's something that I just know from being in the market. But yeah, that's pretty much it. Draw on liquidity, entry, execute. Don't think about it. Just take the trade, risk properly, and just let it play out. And that's it for today, guys.